You can tell me what this candle. What is this candle?
It's an inverse hammer.
Shooting
Good.
star.
Thank you. Thank you. It is shooting star. So you can see that you can see a rejection. This is the first rejection. This is the second rejection. Bearish candle formed. Then the bulls try to shake the market. Still forming another this thing again. Who can tell me this candle? Who can tell me what this candle means? What's the name of this candle here? After the shooting star. What is this one?
It's a hanging man.
Thank you. The first you are there. He's a hanging man. He's a hanging man. So at least we will see a drop. We will see a drop. At least price will try to test this place, use this place as a support. If price breaks, as in if sellers, remember this is a pullback. Oh, it's not a major sell. Oh, hope you all know that.
Oh yeah.
Hope you all know that this is a temporary sell. It's a pullback or a retracement, not the major sell. So price will try and test this area. Price will try and
to TP2.
Yes.
At one point, are you gonna move the Fibonacci?
No, I'm not moving the Fibonacci here because I can see it clearly here now from the last support level to the what to this the previous resistance level. You can see it. You can see that what our fibs aligns with price. It aligns with support and resistance.
I can see, Mr. Victor, your Fibonacci only reaches up to 2.5. What happens if the price passes 2.5? Do you need to draw insert another Fibonacci?
Yes, I will wait. I will wait for price to
retrace,
to form a kind of higher low.
Okay.
You understand? I will draw another Fibonacci again.
Okay. All right.
You understand? So,
I hear you.
So that's how it is. So welcome, guys, to another. We are 15 in number, so we can start in order not to waste our time. So yesterday we discussed about market structure. You understand? It's a very essential part of our trading journey. Essential part of what? Of technical analysis. So if you don't know your market structure, it will be difficult for you to do what? It will be difficult for you to be maximizing profits in your trades. So, like we all know that you don't trade against what? You don't trade against the trend. So, it's very, very important that if you are trading, first thing you need to do as a price action trader is to do what? Is to know your trend. Know your trend. Know how the markets, know the general outlook of the market by going to what? To our higher time frames. We all know that if you want to know how the market is moving, you go to what? To the higher time frames. Then you find entry at what? Lower time frames. So market structure is very, very, very important as a price action trader. You can't be trading, let's say market is moving in a bullish trend and you are trading the reverse. You are trading the reverse of the bullish trend, which is you are trading a downtrend while the market is what? Is bullish. So if you do that, you'll be losing your money. You'll be losing your money. So I said that market structure is the what? Is the study of what? Market behavior. Is the study of what? Market behavior. And it's one of the most important skills that you need as a trader to do what? To maximize your profits in your trading journey. So, and we gave 3 examples or 3 types of what? Market structure, which we made mention of trending markets, ranging markets, and choppy markets. So I said that sometimes I don't normally see choppiness in what? Crypto, but it's very, very predominant as in forex markets. You understand? Whenever we see choppy market, we stay away. We run away from it, because in choppy markets, you don't see. It will be very difficult for you to spot what? Your support. It will be difficult for you to spot your resistance. You understand? So that's why we normally stay away from it. So, but the market that is very sweet for us to trade is what? Trending markets. So I said trending markets are simply characterized by a repeating pattern. A repeating pattern of what? Higher highs, higher lows in an uptrend market, and lower high and lower low in a downtrend what? Market. Hope those that missed the class, hope you guys are listening.
Yeah.
I will not go back again. No.
We are following.
Okay. So I said trending markets are simply characterized by a repeating pattern of higher highs and what? Higher lows in an uptrend market, and lower high and lower low in a downtrend market. So what I mean by this statement is that where is my Shibanu? Shibunu. Okay, let me use this as an example. Today I'm using my PC today. I'm not using my cell phone today. So for example, when market is moving like this, so for example, when market is moving like this, so this is a clear example of what? Of repetition of what? Repetition of patterns of higher highs and higher low. You understand? You can see clearly here that market is making what? Making higher lows. Making what? Making what? Higher highs. Higher lows. Higher highs. and so on. You understand? So here you can see clearly that the market is making what? A repetition of what? Patterns, higher highs and higher lows. And here, that's how trends, you know, if you see this kind of thing now, it's very easy for you to spot what? To spot your support, to spot your resistance areas. These are what? These are our supports. This resistance, this support, this resistance, this support. Are you following? So that's how the market will be forming what? The patterns will be repeating itself until it gets to what? It gets to a certain limit whereby buyers will get exhausted. Buyers will get exhausted. Then you will now see a reversal pattern. What I mean by reversal pattern is that you can see, maybe you could see something like a double top, for example. You know, double top is a reversal pattern. Are you following? You can see something like this. This is our last swing points. These are our last swing points. Are you following? Hello?
Yeah,
We are here, boss.
So you can see, whenever you see this,
yes, sir.
Whenever you see this, let's say now market is moving in an uptrend move, forming lower high, lower low, sorry, higher high, higher low, higher high, higher low, higher high, higher low. It gets to a point whereby you see what? Rejections here, and you see a reversal pattern of what? Double top. This is a double top. This is a clear example of what? Double top. Which shows that what? That sellers are what? Are in the market. You understand? But in this case now, you will not sell yet until you wait for what? For market to break this neckline. This is a neckline of the double top. Yeah? And that neckline here, we have a last, this is our last swing points. So market will break this level. If market should break this level and retest this level, this is our what? This is our resistance. And market broke that what? Resistance level, touch what? As a what? Form here as a support. You understand? They now broke that support level and now use that support as resistance, which is this. Are you following?
Yes, sir.
Yes.
You now have what? You now have a break of structure. If you see this thing now, you've seen what? A clear break of structure. You understand? Market is no longer bullish. Market is no longer bullish. On seeing this, market is no longer bullish in my eye. Then it will now be forming what? Lower highs and what? Lower lows. Here will now be what? Lower low. Here will now be what? Lower highs. You understand? So market will now be forming something like this. It will be forming like this. It will form another lower high to what? To lower lows. That's how it will be moving. That's how you'll be moving until it gets to a certain point again. You will now be seeing rejections, showing that the sellers are getting weak. buyers will come on board again and take over. So that's how what market structure works. That's how trending market works. Are you following? So as the market is making these moves, we call all these moves on the higher highs moves as what? As impulsive moves. They are what? Impulsive moves. Why we call the higher lows as what? They are our retracements. You can call it retracement, you can call it pullback.
Hello.
We lost him.
Hello. Good evening, guys.
We lost him.
Hello.
It seems
We
his
lost.
network is not helping.
Yeah, my network. I had to switch to another network. Are you hearing me, guys?
Yeah, we can
Yes.
hear you. But the
Okay,
screen is
okay.
off. Your
So
screen is off.
oh, sorry. Let me share it back. I don't know why I keep having connection issue. So let's continue, guys. Sorry, I apologize for the network issue that I've been having for days now. So like I was saying, these moves here on the higher high area is what is called an impulsive move. Why the higher lows are what? That are the retracement. Likewise, what? Likewise, the lower highs. Lower highs is what? The retracement. Why the lower lows are the what? Impulsive what? Movements. You understand? So I said trending markets are easy to identify. So you have to what? You have to use your, as a price action trader, you have to use your brain and also use your eyes, because we trade based on what we see in the market. You understand? Don't ever try to go against the trend. As the trend is progressing, try and do what? Try and ride that trend until you get to what? To a certain limit where there will be a change of structure or a break of structure. You understand? If you see a break of structure, what you need to do is just be patient and continue what? Riding that trend if the trend changes. So to determine whether the market is trending or not, you have to use what? You have to use bigger time frames, such as hedge for the daily or the weekly time frame. So never you use what? Smaller time frames to determine market structure. Please note that. Don't use smaller time frames. Smaller time frames, they make a lot of noise. They make a lot of noise. So don't use smaller time frames to determine your what? Your market structure. Then I said how to trade trending markets. You understand? I said if you can identify what? A trending market, it will be easier for you to trade it. If it is a bullish market, you will look for a buying opportunity, because you have to trade with what? The trend is still what I explained here, that you have to trade what? With trend. Don't go against it. If it's bullish, trade it in a bullish way. If it's bearish, trade it in a bearish way. Don't trade against the trade. So trading markets are characterized by two important moves. I said it, that it is impulsive and what? Retracement moves. The second one is retracement. The first one is impulsive move. Are you following, guys?
Yeah.
So, so to predict the beginning of an impulsive move in a trading market, you have to master what? Support and resistance. This is our resistance. This is our support. This is our resistance. This is our support. This is our resistance. This is our support. You understand? So you have to master what? Support and resistance. So my own mode of doing my analysis is that, one, I first of all identify my trend. If I identify my trend, I will now use what? Support and resistance to locate what? The key areas where price will definitely what? Touch and have what? Have a sharp rejection. You understand? So that's, by the way, you all know what support and resistance means now, right? Hello?
Yes,
Okay,
yes,
yeah.
we know.
You all know what support and resistance means?
Mm-hmm.
Yeah,
Yes, we do.
there are proven areas where buyers and sellers find some equilibrium. You understand? So they are the major turning points in the markets. So in trading markets, support and resistance are formed. They are formed from where? From the swing points. This is what? This is a swing point. 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 Are you following? So if you can identify all these swing points, then you'll now be waiting for what? For entries at the support level. At what? The higher lows. Here should be your what? Your entries. Don't ever enter, make your entries at what? At the higher highs, please. If you make your entries at the higher highs, believe you me, you'll be blowing your money. You understand? So it's better you do what? Make your entries at the what? At the higher lows, and take profit at what? At higher highs. You understand? Take profit at what? The higher highs. That's how we ride the trend. But if I happen to make my entry at what? At this higher high, what will happen? Boom, it will hit my stop loss. Are you following?
Yeah.
Please, let's make this class interactive, please.
Yeah, we are following.
Okay. So likewise, the bearish market, your entries should be what? let your entries be at what? At the lower highs. That's if you are selling. Let your entries be at the lower highs to the lower low, lower highs to the lower low, lower highs to the lower low. Don't sell at lower lows. If you sell at lower lows, yeah, the whales will be waiting for you here, because they know that you definitely put your stop loss here, and they will clear it immediately. Just a sharp pullback or rejection will hit you off from the market. You will say, look at my trade, from my analysis, the analysis says it will drop, and it definitely dropped while hitting my stop loss. So you start complaining, you will not allow emotion to set in. You will start chasing your trade. Before you know it, you lose again. Some people will say crypto is a scam after losing, after blowing their money. So any questions so far before we enter the next market phase? Any question? Hello?
Hi.
Any question? Any question?
None for now. Let's write it.
Hello.
For those that
I
missed
have
the
a
class.
question.
Yes. Okay.
Hello, sir. Can you hear me, sir?
Yes, I can hear you.
Okay, the last explanation, now, please, I didn't get it right. The last explanation you said right now on the bullish, there's something you said, I didn't get it right because I'm putting down notes, please, sir.
Okay. I said that if you want to make your entries, be it bullish or bearish, don't make your entries at the higher highs. The higher highs are the what? They are the resistance level you are buying. That's why they said, if you want to buy a coin, if you want to purchase a project, don't buy at the highs.
Okay.
You understand? Don't buy at the highs, because if you buy at the highs, you definitely witness what? A drawdown. Are you following?
Yes, sir.
So let your entries be at what? The higher lows. In an uptrend moves, let your entries be at what? At the higher lows. It's very, very important. Very, very important. So that you'll be making profit as the trend is progressing. You'll be making profit. You'll be making profit until you exhaust what? That trend. Until you see a break of structure. Are you following? Then
yes,
in a downtrend, don't make your entries at lower lows. Lower lows supposed to be your take profit areas. Higher highs supposed to be your what? Your take profit area. So your entry should be at what? At the lower highs. Then you now take profit at what? At the lower lows in a downtrend movement.
Okay.
Are you following?
Yes, sir.
So, for example, now, here I've talked about a reversal. This area now, this is a reversal pattern called what? Head and shoulder here. Sorry, not head and shoulder. This is a double top. You can also see a head and shoulder pattern. You know what I mean by head and shoulder?
Yes.
Yeah. Head and shoulder pattern, something like this.
Mm-hmm.
See something like this. This is the shoulder. This is the right left shoulder. You see another one like this.
Mm-hmm. Shoulder pattern.
This is a clear example of what? Head and shoulder pattern. This is our neckline. This is our neckline. So market will do something like this. And do what? The test. But most times retests don't happen. No, it don't happen. It does happen because of the momentum of the words of the bearish move. So this is what? This is a bearish reversal. A bearish what? Reversal pattern. Likewise, what? Double top. Are you following? So you can still see something like this here at the end of this bullish trend. You can also what, see a bearish a head and shoulder pattern. You understand?
Mm-hmm.
So you can as well see a triple top or a rising wedge. So all those things are what? They are they are bearish reversal pattern. Then bullish reversal pattern, you can as well see what? A double bottom, something like this. You can as well see something like this. So remember that this place is our neckline, which is what? The last swing point. You can see something like this. The market broke that level and do what? And retest. Market now broke that level and do what? And retest like this. So here now you can confirm that what? There is a break of structure from this what? Downtrend move. Then the bulls are what? Are back in the market again. You understand? So you'll be seeing reversals at the end of each what? Trend. You'll be seeing a reversal. You'll be seeing a reversal. So it's not left for you as a price action trader to identify what? The kind of reversal pattern formed. Are you following?
Yes, sir.
Yeah. So that's the trending market for you. Any more questions? Any more questions before we go over to another thing? So let's go over to ranging markets.
Okay.
Let's go over to ranging market. I will clean all this. Or maybe I'll clean it later. Let's move on. So you can jot down some things. Ranging markets are pretty straightforward. They are often called sideways markets. They are often called what? Sideways. When market is moving sideways, like this. When market is moving like this, when market is moving like this, this is an example of sideways movement. Another word you can call this is consolidation.
Wait.
Consolidation.
Consultation.
Consolidation.
Okay.
Consolidation. That's a sideways movement. So here, trading this type of market is very tricky. Very, very tricky. You understand? So let's continue with the notes. Ranging markets are pretty straightforward. They are often called sideways markets or consolidation because their neutral nature makes them appear to drift to the right horizontally. Ranging markets are pretty straightforward. They are often called sideways markets or consolidation because their neutral nature makes them appear to drift to the right horizontally. So what I mean by this statement is that, as you can see, this market is moving sideways. It's not creating, it's no longer creating what? The and what is it called? Higher highs and higher low. It's just moving right in a horizontal manner. You understand? So whenever you see this market, whenever you see this type of market, bear in mind that there is what? The market is neutral. There is indecision in the market. There is indecision in the market. I always use this word that buyers and sellers are fighting. They are fighting on who to take over the market from the market. So the market is neutral, it's flat. So some people can also trade this. So what they do is that they wait for the bottom for buys. You understand? And sell at the top. So these areas are what? At the bottom. They are the support levels. Madam, you can mute yourself. Why this area is what? Our resistance. So if you are trading this kind of markets, you buy at the support level and take profit at the resistance level. You sell at the resistance level. You understand? And take profit at the support level. So the reason why I say that this market is tricky is that here you don't know how the market is playing. You just neutral. The market is not trending. You understand? You might be buying this market now, holding this market for some time. Before you know it, the market will get to this place and do what? And break this area. The market will break this area. The market will do like this. You are buying, mind you, saying that definitely buyers will take over. The market will break this level and do what? And dump. Boom. You understand? On see this now, sellers have taken control of the market. Likewise, what? Selling. Might be selling this now. Something like this will happen. For example, market will break the resistance level. You are selling. And it will break the resistance level and do what? Retest. And retest like this. Then market will start going up again. He said the buyers have what? They've conquered the sellers. They've taken over the market. So me personally, yes, market will break out. You understand? Market will break out. Then the buyers will have control over the market, or sellers will what? Or the market will break down, will break out from the downside. Then sellers will now take over from the market. So what I normally advise is that I don't trade ranging markets. I don't trade it. I don't like trading ranging markets. You understand? I will have to be patient and see a breakout here. I will now do what? Make my entries here, my buy entries here. Or I will see a breakout on the downside and make my entries at this level. Are you following? Mind you, this level will now be what? This level will now be higher low, while this level will now be what? Lower highs. So this is a typical example of what? Typical example of ranging markets. So when the market makes a series of higher highs and higher low, you can say that the market is what? Trending up. when it stops making these consecutive peaks, we say that the market is what? Is ranging. Are you following? Should I repeat the word again? Should I repeat that sentence again?
Yes, you may, sir.
Okay, I said when the market makes a series of higher highs and higher lows, we can say that the market is trending up. The market is an uptrend what? It's going uptrend. But when it stops making those consecutive peaks, we can say that the market is ranging. When it stops making what? Higher highs and higher lows. As you can see here, it's very difficult to see your what? Your higher highs and higher low at this level like this. So it's very difficult to spot your higher highs and higher lows here until you see a breakout. Once you see a breakout and retest, that retest will now be what? Your higher lows. So your entries will now be here. You now have full confirmation that the bulls are back in the market, that the market is no longer neutral. There is no longer indecision in the market. Are you following?
Yes,
Yeah,
sir.
yeah.
So ask question, please endeavor to call me back when you don't understand anything. So a ranging market moves in a horizontal form where buyers and sellers just keep knocking price back and forth between the support and the resistance level. So they are fighting. Yeah, I remember. I like using fighting. They are fighting on who to take over the market. So in a layman's language, you can use that. You can say that buyers and sellers are what? They are fighting on who to take over from the market. So a ranging market moves in a horizontal form where buyers and sellers just keep knocking price back and forth between the support and the resistance level. You see, this area is our support, while this area is what? Is the resistance. So they keep knocking price up and down, up and down, up and down until you see a breakout. So the difference between trending markets and ranging markets is that trending markets tends to move by forming a pattern of higher highs and higher low. In the case of an uptrend, and higher low and lower low. In the case of what? A downtrend is supposed to be lower highs and lower low. In the case of what? Of a downtrend. So that's just the difference. But ranging market tends to move horizontally. Like I said, ranging markets gives what? A clear reputation of what? Of higher highs and higher low, or lower high and lower low in a downtrend, higher highs and higher low in an uptrend. While ranging market tends to move what? Horizontally between key support and resistance level. So that's the difference between the two. Are you following? Hello?
Hi.
Are you following?
Yes, sir.
Let's try to grab it.
Okay, who can give me the difference between between a trending market and a ranging market? Hello, who can differentiate the two markets for me?
Let me try.
Yeah, try.
A trending market is either going upwards or going downwards. Then a ranging market is consolidating. It's just playing in the two parallel lines. It's not going up or either going down.
Okay. Okay, you tried.
Yeah.
Who
Okay, let
else?
me also try. a trending market will always have a pattern where you'll be able to notice your high and lows, your low lows, your low highs. But with a ranging market, it just goes sideways to sideways. There's no particular pattern or trend that you can really be able to notice.
That's good. That's good. That's good. So in a trending market, you'll be looking out for uptrend and downtrend moves. That uptrend moves, you'll be looking out for what? Repetition of what? Higher highs. Market will be creating higher highs and higher lows for you in an uptrend move. While in a downtrend move, market will be making what? Repetition of what? Lower highs and lower lows. But in a ranging market, it will be moving sideways. It's moving in a horizontal form. You will not be seeing higher highs and higher lows again, or lower highs or lower lows again. So that's just the difference between the two markets. So your understanding of the difference between the both markets will help you better use what? The right price action strategy, the right market conditions. It will help you to make your decisions, your trading decisions better. So that's why I said price action is key. Like the day that I took on FTM, I showed you guys FTM and sand. I use sand as an example. Oh, come on. So I use sand as an example here. As you can see, okay, sorry, let's deviate a bit. As you can see, price broke this level. I saw this yesterday, right? I saw this yesterday. I saw these weak rejections here yesterday. Price definitely used this place, this area, as what? This is a resistance area as support. You understand? So before now, price started what? Look at it, touched negative 27 dots. It touched that area and started having what? A rejection. So this is a clear example of what? Of market structure. You can see your what? Your highs. You can see your higher highs. You can see your higher low. You can see your higher highs. You can see your higher lows. Now price approaching what? Approaching the higher high again. You can see a rejection there. Remember, higher highs are the resistant what? Areas, while the higher lows are the what? Support area. You can see that price touched the resistance area and what? Started having rejections. So if you go to your lower time frame, for example, H1, are you seeing what is happening here? You can see rejections here. Here now, I'm clearly seeing something like double top. Yeah? Are you following? Hello?
Yeah.
So
Yes, sir.
I'm seeing double top, but it's not confirmed yet. So this is a clear example of what? Market structure. You can see your higher lows, your higher high, your higher low, your higher high, your higher low, and your higher high. So that is the example of it. Then let's look for a sideways market. What will I use now to look for sideways markets? Let me use BTC. Okay, this is BTC. You see all this, you see these areas here. You see this area. All these areas are what? They are sideways movements until breakout happened here. Yeah? Are you seeing it?
Yes, ma'am.
Yes.
This is an example of sideways movement. You can see buyers, buying, sellers, selling, buyers, selling. You know, that's how it will be doing until you see a breakout. So that is how ranging market works. So trading ranging market is completely different from trading what? Trending market, because when the market is ranging, it creates equilibrium. What I mean by it creates equilibrium, buyers are equal to the sellers, and there is no one in control of the market. So that's what I mean by what? The market is what? There is indecision in the market. We have buyers and sellers, buyers selling, buying, selling, sellers selling. So no what? There is indecision in the market. So the best approach to that market is just to wait until you see a clear direction of the market. That is just it. Are you with me, guys?
Yes, sir.
Yes, sir.
Yes, sir.
Yes, sir.
So the best approach to it is to what? Is to stay clear from the market until you see a clear direction. So I said trading ranging market is completely different from trading what? Trading market, because when the market is ranging, it creates equilibrium. That is, buyers are equal to the sellers, and there is no one in control of the market. This will generally continue until the range structure breaks out and a trending condition starts to organize. So this is the explanation of what I just mentioned now. Here, there is an equilibrium here. Understand? Equilibrium, indecision, buyers are buying, sellers are selling in this market, type of market now, until you see a breakout from the upside or the downside. You will now have what? Full trending condition. Are you following? So the best buying and selling opportunity occur at the key supports and the resistance level. Are you following, guys?
Come back again.
Okay, I said.
Please, can you repeat?
Okay, I said trading ranging markets is completely different from trading what? Trending markets. Because when the market is ranging, it creates equilibrium, indecision. You understand? You can also as well use indecision, bracket it, indecision after the equilibrium. It creates equilibrium, brackets, indecision. That is, i.e., buyers are equal to the sellers. You can see that here, buyers are equal to the sellers. They are equal. Buyers are equal to the sellers, and there is no one in control of the market. Hello?
Hello?
Yes,
Are you hearing
hello,
me?
clearly.
Okay. So this will generally continue. The market will generally continue like this, up and down, up and down, up and down, up and down, until the range structure breaks what? Out. And a trending condition will start what? To organize. You start seeing a trending market again. As you are seeing here now, market broke out from this resistance level, retested, and do what? Continue. So you can see clearly the trending condition have started from this angle here. Likewise here. Likewise here. For the downward move. So the best buying and selling opportunity occur at the what? At the key support and resistance level. So have you gotten that about ranging markets?
Yes, sir.
Okay. Then
Yes,
let's
sir.
go to ways to trade ranging markets. Ways to trade ranging markets. That's if you want to trade it. Some people like ranging market. So it all depends on what? On your strategy. Some people like trading ranging market as their strategy. Like me, I don't like ranging markets. I like trending markets. You understand? So ways to trade ranging markets. Number one. Number one, by waiting for price to approach support or resistance level. Then you can buy at key supports. If you want to trade this market, you buy at this support. At this support here, support area. By waiting for price to approach support or resistance level, then you buy at key resistance and sell at key, you buy at key supports and you sell at key resistance level. So you buy here and take profit at what? At the resistance level. Then you sell at resistance level and take profit at the what? At the support level. So that's what that statement means. 2, by waiting for breakout from either the support level or the resistance level. So if you don't want to be taking risk, trading inside the range, you just wait for breakouts from either the support level or the resistance level. In fact, it's best to wait for a breakout. It's best to wait for a breakout. Yeah.
Just I got a bit confused. You said something here that you buy at support and sell at resistance, yeah? So
Yes.
then you said you take your profit at support.
No.
So I got a bit.
I said you buy at support level.
Yes.
You understand? And you take your profit at resistance level.
Okay.
You understand? Okay. That's if you are going what? Uptrend.
Yes.
If you are going bullish. Then if you are going bearish, you start selling from the what? The resistance level. Mind you that whenever market approaches what? Resistance level, you will definitely see what? A rejection. You understand? Market will reject. Sometimes you can see multiple rejections. Sometimes you will see a sharp rejection, a huge rejection candle.
Yeah. Okay.
You understand? You can see a shooting star. Shooting star is a strong bearish candle. You understand? You can see what? A shooting star. Then the next candle that will pop up is what? A strong bearish candle. Indicating that what? That At least that at that particular moment that sellers are in control. So you start selling from the resistance level to take profit at the what? At the support level. Are you following? That's if you're going downtrend, if you're going bearish.
Okay. Okay.
So I said 2 ways of trading what? Of trading ranging market is what? 1, by waiting for price to approach support or resistance level. Then you can buy at what? Key support and sell at key resistance level. Secondly, by waiting for what? A breakout from either the support level or the resistance level. So that's the key thing that you need to know. The key things that you need to know if you want to trade what? Ranging market. So I always advise that you should be what? Patient. You know, patient is key in this game. Oh. In this crypto or forex industry or any other financial markets, be it stock, be it gold, be it oil, any financial market, patience is key. Price action is price action. Technical analysis is technical analysis. So whatever you know here, you can do what? You can use this now to also what? Interpret what? Oil charts. Also interpret gold charts. Like if I open my gold now, or if I open any other instrument like forex, you can see it's still the same thing that you'll be seeing. It's still the same candle. You still see candle. You still see support and resistance. So that's why I said always pay attention to technical analysis. It will help you. It will help you. If you know TA, if you know fundamental analysis, you know every financial instrument has what? Its own words, fundamental words, analysis. Fundamental analysis of crypto is different from fundamental analysis of what? Currency, gold, stocks. They are quite different, but their technicals still remain the same. Are you following? So if you know these two, man, you will liberate yourself financially. You will give yourself financial freedom. So I urge you guys to practice, put in the work. Me, during the lockdown, I use lockdown to study this very, very well. If you see my table, my study table, full with books. So you have to make out time. Even if it's 2 hours from your time, from your spare time, 2 hours to do what? To study TA. You don't read TA by book, using book. No, it's practice, practical, core practical. So I urge you guys to, put in work. Me, I always, you will see me on charts. I always dedicate 2 hours of my time to do what? To study. If I'm on the go, maybe if I'm, in my office or doing something, I use my cell phone. If my laptop is not close to me, I open my cell phone and use my watch. I use my TradingView mobile to do what? To practice. Like all those screenshots that I sent on the WhatsApp group, I used my mobile to do all those things. You understand? So it's very, very important to practice. If you practice, you will see things clear and you will understand TA. So let's go back to our class. Any questions so far? Any question? Hello, talk to me, guys.
No, we're okay, sir.
Yeah, okay.
Silence means consent.
So for those of us that missed the class, any question? So since there is no question, let's continue. So I've given 2 ways to trade ranging markets. So continue with your note. When market is ranging, no one knows what is going to happen. So that's why I said it's very dangerous to trade what? Ranging market. You don't know what will happen next. You might be buying, before you know it, market will reverse and start selling. The breakout will happen. A big move will happen like this. Market will break out. So when market is ranging, no one knows what is going to happen. We don't know who is going to be in control of the market. We don't know yet. Because market is still what? In an equilibrium. Market is still moving sideways. Market is still consolidating. So we don't know who is going to what? To be in control of the market yet. This is why you have to pay attention to the boundaries. To the boundaries. What I mean by boundaries is what? You have to pay attention to all these boundaries, the support boundary and what? The resistance boundaries. You have to pay attention to it to see if there will be what? Breakout here. If market will get to this place, push, boom, downwards, and do what? Retest. So you have to what? This is why you have to pay attention to the boundaries. But when one of the players decide to take control of the market, we will see a breakout of what? The support or the resistance. So when one of the players, be it what? The buyers or the sellers, decide to take control of the market, we will see what? A breakout. So that's the example of this that I drew here. You see a breakout happened, the market retested, and what? Buyers took over from the market. Or you see what? Market price approached this boundary support level here and broke out. Do what? Retest, and what? Sellers have full control of the market. So that's the essence of that explanation. Should I read the sentence again? Hello.
Yes, sir. It's clear.
This is the note that I made for this class. So for easy explanation, it will help you to explain market structure better. So when market is ranging, no one knows what is going to happen. You don't know. You don't have an idea of who to what, of what will happen in the market, because the market is what? Is in consolidation mode. Market is in equilibrium. There is indecision in the market. So you have to be patient. You have to wait until you see what? A breakout. You have to pay attention to the boundaries until you see what? Buyers or sellers decide to what? To take control of the market. Note, the breakout means that the ranging period is over. Whenever you see a breakout, market is no longer what? Ranging. Note, breakout means what? The ranging period is over and the beginning of a new trend will take place. It is best way to enter afterwards the breakout. So that's why I always avoid what? Trading the range until I see a breakout. Here, I will now confirm that yes, you see that the buyers have taken control or the sellers have taken control of the market. It's important to remember that range boundaries are often overshot, giving the illusion a breakout is occurring. You understand? So when price get to this point, you have in mind that a breakout is about to happen. Breakout is about to, so it will give you that illusion that breakout is about to happen. Before you know it, it will reverse back again. It will reverse back again. Breakout will not happen. You understand? So this type of market is dangerous. It's dangerous. I always avoid this type of market. So it will give you an illusion that breakout is occurring. So this can be very deceptive, and it does trap a lot of traders. It will trap you and hit your stop loss, who positioned into a breakout. So the essence of all these things is that just stay away from ranging markets in order to safeguard your equity, to safeguard your money. Stay away from it. All you need to do is just to wait for breakouts. If you see a breakout, you now do what? Make your entries. Either the bullish side or the bearish side. So this is all I have for you today. This is all I have for you today. Maybe next class we will look into chopping market, but chopping market is not that necessary in crypto world. You know, it's not that necessary in the crypto world. So any question, guys?
Coach, the notes that you're giving, is it the same book that Chidera was using previously? Are we continuing with the same book?
No,
Okay.
no. This one is just a note that I made.
Okay.
For you guys.
Okay. Is there any book maybe you can recommend for one just to go into detail again?
Most of my books are forex books, but you can TA anywhere.
Okay. All right.
TA is TA, so you can still use it. You understand?
Yes.
So I will drop the PDF.
Okay, thank you. I appreciate it.
I will drop the PDF. One is a Candlestick Bible.
Okay.
Candlestick Bible, and the other one, I've forgotten the name. My head is full.
Okay.
So any question, guys? Talk to me. I always like hearing from you guys. Talk to me.
For my side, just a thank you, man, for the session. No questions.
Hope you've digested what? So market structure.
Yes.
If you know it will be you will lose money. You will definitely make mistake. Market will definitely go against you. But the chance of you losing money, if you know market structure and other confluence, bring other confluence like support and resistance, identifying your zones. Like me now, most times I don't use support and resistance again. If I open chart, what I will do is that if I open my chart, I will zoom in. You understand? If I zoom in, use my naked eye, I will know the area that price will definitely struggle. You understand? I will know the area that price struggled and do what? And make my move. You see this area, you see here. Here is a very strong zone. This area now on this FTM, price touched this resistance level, boom, it dropped, touch again, dropped, then tried again, broke out. Now use this place as what? As support. Resistance turned support, started going up. Reach this level, form the double top. You see, form the double top. Boom, started dropping again. Reach this zone, started what? Going up. So all this, if you can identify this, all these areas, key critical area. You see this place, how many touches do you see? 1, 2, 3, 4, 5, 6. You see that negative 27. See that negative 27. Price didn't pass through this resistance level. Price didn't break through the resistance level. Now it's dropping. Are you following? Now it's dropping.
Yes.
So if you know your technicals very well, you make money. Be it scalping. I can scalp this position, this candle that you are seeing here now. I will just go to 5 minutes and scalp it. 1:3. I will go off. Bam! I will go out from this market. You understand? So TA is very, very sweet. Very sweet. So the ladies, talk to me. Do you have any question? Do you have any encounter? Do you have anything? Talk to me.
Victor.
Yeah.
Coach.
No, we are just trying to digest all you have said.
Okay.
Pick up.
But you really understood everything, right?
Yeah, we understand.
Okay.
The other issue, Victor, I see here,
So
if
far, we
you fail
understand. It's to practice it.
if you fail to draw your support lines and resistance lines, it's very difficult to know where the trend is going.
Simple.
So support levels are very key.
Support levels. You can use trend line to support your trend. You understand? Yeah. You can use trend line to support your trend. So, but support and resistance is key. That I have a friend that the only thing that he knows is just support and resistance, and the thing is working for him. That's his strategy. He will locate key support areas and key resistance areas. He'll be waiting for price to get to those levels.
Okay.
So once price gets to that level, boom, he will make his entry. Whether buy, whether support, whenever price approaches support, he will buy and sell at a resistance level. He will just go out, make his money and go. So
including
if you keep studying, you'll be identifying what works for you. You understand? You'll be making your journals, you'll be making your trading plan based on what is working for you. You understand? Let me give you a tip. You know why people lose money? You know why people lose money on futures? You know why? Because they tend to chase everything in the market. They tend to chase every coin. If you can have like 2 or 3 coins that you'll be doing analysis on, like this FTM now. I like FTM is like my wife. I'm marrying FTM. You understand? So I've taken a lot of profit from FTM. I will take profit, I will buy back, I will make profit, I will buy back, you understand? So if you can identify like 3 coins that, okay, you can be doing what? Your analysis on. Daily analysis, you be doing analysis on. You will see that you will be what? Perfect in what? You will be perfect on those words, those coins. You'll be making money consistently on those coins.
Yes, sir.
Are you following? But if you
Yes, sir.
continue chasing from this, you jump to this, from this, you jump to this, you will get confused and you will keep losing money. And whenever you lose money, don't do what? Don't enter any trade again.
Okay.
You understand? If you lose money or if you get liquidated, don't do what? Don't enter any trade. Just analyze that trade. What went wrong? Why did you lose money?
Yeah.
Ask yourself question: were you greedy? Did you allow emotions to get over you, or fear, or any other thing? What did you do wrong? Did you draw your support well? Did you draw your resistance well? Is your entry okay?
Yeah.
Did you just enter the trade? Was your entry late? So all these things. So you need to ask yourself questions. Then you now make corrections. Move on. Instead of losing money, you start chasing trade. You will lose again. And whenever you are trading, I always tell people that whenever you are trading and you are on profits, or you are in profits, you understand? Protect your profits. Protect your what? Profits.
Your profit.
I'm just giving you tip now.
Yes, sir.
Because there's no question again. You guys really understood what I thought you guys.
We are just enjoying you talking. We enjoy you talking.
Okay.
So we are careful.
Okay. So
how do we do that?
Always protect your profit.
You take your profit. You take it. You take it.
There's a way I do it. Let me give you an example. There's a way I do it. Let's assume now that I entered this FTM from here after the breakout occurred here or from this particular area. And my intention is just to long this trade. So the trade is progressing well according to my plan. And I'm seeing like 30%, 40% profits. You understand? And I've not reached what? My TP levels.
Your TP1.
Yes. So even if I've gotten to my TP1, what I will do is that I will break even. I will break even. Break even. What I mean by break, let me type it so you see it. I will do what? I will break even.
Break even.
So what I will do is that I will set my stop loss. I will set my stop loss at my point of entry. You know, we all see, if you are trading on futures, you will see your entry point, right? Your entry point numbers. You will see your entry point number. So I will use that number and put it as stop loss. You understand? So if anything goes wrong, let's say there's a fundamental news that was released that BTC will do this, and the thing started affecting BTC, and you know that anything that affects BTC will definitely affect other coins. You understand? So if there is any fundamental news that happen, it will just do what? It will hit my break-even. I will go risk-free. My money will not be affected. You understand? That's number one. Then I can decide to what? To trail my stop loss. What I mean by trailing of stop is that, let me write it again for you to see. So what I mean by trailing of stop is that as my trade is progressing according to my plan, I will just be moving my stop according to percentage. Let's say the trade has gone what? Let's say 50%. I will trade my stop at what? 30%. I will bring my stop at 30%. The trade goes 70%. I will bring my stop at what? 40%. You understand? I will bring my stop at 40%. Then the trade eventually hits my TP1. I will now bring my stop loss. I will take partial profit. You understand? I will take partial profit. Yeah, let's say I will take like 50% profit from that TP1. With that, I've secured some profit for myself. You understand? And still have what? I still have trading. Let's say I still trade what? The remaining of the percentage, as in the ones remaining, the remaining 50%. I will move my stop loss to that what? TP1. You understand? And be watching. So if the trade keeps progressing, I will keep trailing my stop. So if anything happens, one, I've already taken 50%. You understand? And the stop loss that will be hit, I will still go out with profit. So those are the ways to protect what? Your profits.
Yes, sir, Victor. That's one way to explain it to us that I think we need to see it practically as well. Because sometimes difficult.
No, see, if you are trading, I'm holding a let's say a live trade now. I would have shown you guys how to do that.
Yes,
but
yes,
you can as well. You know that that place that you normally send a screenshot of your trades.
Yes.
Yeah. If you look at that area, you will see your entry price. Your entry price.
We see that. Yes.
Yes. So if your trade is progressing according to your plan, maybe you are seeing greens popping up. Then use that entry level as your what? As your stop loss. Take that entry level, go and put it at stop.
Okay.
You understand?
I would want to see that live, because it has been a problem for me to change my stop.
Okay.
Yeah.
Okay.
One day.
Yes. What I will do is that I don't know. Raf will also touch that area.
Yes, sir.
He will also touch that. So he will also teach how to protect that. So I'm just giving you a tip. So you will not be losing your profit. You will protect your profit. It's not easy to get profit too.
Yes, sir.
So whenever you get it, try and protect it.
You have to protect it. Yes, sir.
Yes.
Thank you so much.
So since there's no question, we have to call it a day.
Thank you.
All right, thank you.
Thank you. Good night.